XRPL is the blockchain that Ripple builds on top of. So why XRPL? It was built with sustainability in mind. Back in 2012, we reacted to Bitcoin's energy consumption back then, right? So we created a high speed and low energy usage blockchain. In 2020, we partnered with the Rocky Mountain Institute to make sure that it's carbon neutral. So we've been carbon neutral for a long time with that by buying energy RECs. And then finally, XRPL Grants Foundation also has been doing several sustainability waves. All right, I can hit buttons. That's Ripple. That's XRPL. So we've had a sustainability wave, and just about every grant wave now we have several sustainability projects. Those the XRPL grants really focus on pre-seed ideation of projects. So I encourage anybody that has an interesting sustainability project to apply to the XRPL grants. All right, so the great thing is the last presentation covered a lot of this stuff. So I'm going to go through this real quickly and get to how I think this presentation dovetails nicely with that last one, right? So in the last one, you found out about what it's like to be a developer, how to ingest the data, how important the data is. I'm going to talk about how projects can get funding with the data, how buyers can leverage the data to reduce the risk. So I'm going to talk about how the data not only helps the project, the developers that are creating the tools on top of this, but how you actually make money off of this, how you can actually promote your project, and how you can actually reduce the risk to make sure that the project actually happens. All right. So, real quick, this part wasn't really covered, and I think it's important to understand the building blocks, right? So there are different token types. There are SFTs, NFTs, and fungible tokens. Each one of those has its own benefits, right? So fungible tokens are great for the carbon pools. What fungible tokens allow you to do is to take multiple projects, get this liquidity that Marcus was talking about in his last presentation, right? The problem with having this liquidity is if you put all these projects together, it's very difficult to get down to the atomic state of what carbon credit ID is really applying to this thing that you're doing, right? NFTs solve that problem by having you can have a credit ID, you can have that serial number, one-to-one relationships. You know, when that thing gets traded, you see its entire life cycle being traded from person to person and finally being retired. Personally, I've been doing a lot of work in the SFT area. SFTs are great because they combine what I think is the best of an NFT and the best of a fungible token. So the way we're implementing SFTs, and I should have a spec out soon for this, is we're actually attaching a full list of all the serial numbers to a fungible token, a small fungible token pool. And those SFTs, as they get retired, it's marked on chain. This ID for this credit is going to apply for this retired thing. So you don't necessarily track an exact credit through the whole process, but you know when it gets retired, it's definitely linked to this thing that was in this pool from this project. Normally, the way we're setting up SFTs too is that we're building them on a project vintage model. And that gets me to the project vintage tokens. So the way a lot of the voluntary ecological markets work today is they're really breaking down these project pricing into a project and the vintage for that project. So you might have trees planted or trees that are sequestering carbon in 2020, or you might have the cement factory that's sequestering carbon into the cement, everything that happened for this year. Why is that important? Because I, as a buyer of carbon credits, wants to know, make sure that I'm making an impact. And if I'm buying credits that allegedly sequestered carbon in 2016, is that really additive? Does it really matter? That, you know, at some point you need to retire these things and not be trading them around. So project vintage allows you to say, I'm doing an impact, and you can decide, like, is 2020 far enough back? The UN is now giving guidance that they want to see things retired within 3-ish years. So we should be tracking that and not putting things into our pools that are from 2016. That blended rate of the pool is always something that really scares me. So when I hear about a carbon pool, I'm always looking at it to see, okay, well, there's some great high value nature-based projects, but then, oh, wait, there's a hydropower dam that's doing stuff in 2016. Might be okay for some people, but I want to know exactly what project I'm working on. Finally, and this is really relevant for the Filecoin Green, the CO2.storage people, is we've got to store that data somewhere, right? And so that's where Filecoin, other distributed systems are coming online. This allows you to store your data in a immutable way. So when I put an audit in, when I put a report in, when I put MRV data in, the data structures that Marcus talked about, that's all stored permanently and it can't be altered afterwards. So that's great. That's what I want to see. I don't want somebody to say, hey, I'm going to change my audit results 2 years later to make myself look good. But you also want to have ongoing audits, right? So that means next year, I want to know if the forest didn't burn down. I want to make sure that there wasn't illegal logging. So you need to be able to update that data. Luckily, Web3 now has solutions for that. Ceramic, Estuary allow you to have an immutable record of updates to the data. So this is really great for the ecological projects because they can keep updating information so you know those credits are still valid and good. All right. So now we're on to what I call is the meat or plant-based alternative to the meat of the presentation. So what are the benefits? All right. Well, this is where I'm going to look at it from a non-developer side and start looking at it from a buyer or a project side. Information access allows them to reduce risk. What does that mean? So if I can see other projects that are similar to that project or other projects in that same geo region, and I can see historical data, I can now compare that to what this project is going to do. If I can see this project's historical data or other ecological projects that developer has done, then I know I can lower my risk. And now I can do this all publicly. I don't have to call up the project. I don't have to do a lot of this deep research. All that deep research is available to me on chain. So that's super important. I can't emphasize that enough. We already talked about the fact that if you are able to attach the serial numbers for each individual credit, that gives you pure auditability. So you're not doing the double sell or the double sell with credits. The other really big thing for projects is this price discovery and leveling the playing field. So what does that mean? Today, almost everything is done over the counter. Over the counter is great, but that means that I don't see that data. Different companies have been born to try and show that price discovery data to other people, but you have to pay for that. So an ecological project now has to pay to get data to try and figure out what their credits are worth. That's bad. It should be just publicly available so everybody can use it. And that's another great thing where these projects can now get better price for their credits by having that stuff on web or on chain. So finally, let's talk a little bit more about funding. And this is where I think it's super exciting for projects, right? So forward purchases, what are those? Those are a company saying, I'm going to pay for credits that I'm going to get delivered later, but I'm going to give you the money now. This is one of the best ways for ecological projects to get funding. Ripple, I think last year, was one of the top forward purchasers of ecological projects or technology projects for funding. That gives them money now, that gives them startup capital, and then they deliver later. Advanced market commitments is another great way for projects to get social proof that they're doing good. So you've heard about Frontier Foundation. Frontier Foundation, they have the $1 billion fund that's investing in carbon credits. Do you know they've only spent a little over $6 million? Yeah, that's my reaction. They're awesome, though. Okay, look, what Frontier is doing is they're actually making a commitment to spend money later. That doesn't give the project money, so they don't have startup capital. So how is that beneficial? Well, it is kind of beneficial. Actually, it's really beneficial. If someone like Google says, I'm going to give you $100 million later, I can take that contract, I can take that memorandum of understanding, go to a bank and say, hey, can you loan me some money? Google says they're going to pay me, right? So that leads me to the next one, which is project bonds. So it's estimated the green bond, just for ecological green projects, market this year is going to be like $1 trillion. I think that's the market cap of crypto right now. So there's a lot of money there. So there's a lot of money in those green bonds. And one of the ways you're going to be able to tap that is being able to go to the bank and say, hey, I'm a valid project. Well, how do you do that? You get a bunch of data together and you give it to them. Wouldn't it be awesome if banks or investors could just go online and look at projects and go, hey, this person has a bunch of forward contracts that they've already sold. They've got advanced market commitments. They've sold this many credits. Here's the historical information. I can do all of that if we have these data standards that Marcus talked about. I can tokenize the forward purchases. I can tokenize the advanced market commitments. And I can just reach out to projects directly. I think that's super awesome. That's getting a lot of money into the hands of people. That's also reducing the due diligence that project has to do. So they don't have to spend as much time working with banks. We talked to one organization that does due diligence on these projects. They're like, I think you could cut our cycle from 6 months down to 30 days, maybe 60 days. But that's significant in getting money into the hands of these people, right? So I'm super excited about that. Now, I'm going to pause. I think there's going to be a lot of people talking about web native solutions, and I think they're all cool, and I love them, and the sandbox and everything. But there's a lot of money in those first three things. Like I said, bonds alone, $1 trillion this year. So what I'm trying to do at Ripple is figure out how we can do unlocks of that money. So that's what I'm more excited about. On that, I think I only have 1 minute left, so I'll stop. And also, if anybody is interested in this stuff, please find me later. And for the college kids that are here, talk with me about maybe interning at Ripple. We have both on the business side and on the tech side.
Thank you, Peter. Does anyone have any questions for him? Yep.
So thanks so much for the great talk. This is really wonderful. And it really kind of shows a lot of the more traditional finance leaning side of things that could be unlocked with Web3 and what that might look like for more sustainable capital. Really interested in what you see as the potential for using Web3 native solutions. Obviously, you're not touching on all of the different projects, but the potential for tokenizing certain things to go towards things like sovereign wealth funds and finding ways to unlock that area of capital.
So a real cool thing that could be a whole other presentation is how I believe that alternative investments today, whether it's carbon credits or other alternative investments that are not like stocks, bonds, everything. So, all the other stuff, those are highly illiquid. And so if I have a retail fund and I have an investment thesis, the only things that I can really put in that retail fund are like stocks and bonds and very liquid assets. It'd be awesome if we had a way to create a liquid market, i.e. tokenization and firms like Exchange that we're working with, Thallo. There's a bunch of other Web3 climate credit trading exchanges that are coming up. Then as a retail fund manager, I can actually buy and sell carbon credits into my fund and be able to balance things out. Because otherwise I've got a bunch of, consumers that are making my fund change and I have to rebalance. So I think that's a super exciting thing. One other super exciting thing I'd say is with those project bonds. Imagine if I'm an island nation and I want to stand up my central bank digital currency. Maybe I'm pegged to the dollar, but I still want to have my own currency that I can track the money that and have some sovereignty over my money. Wouldn't it be cool if instead of having a treasury backed by US dollars, I had a treasury backed by mangrove trees that I got a green bond for that gave me money. And oh, by the way, those green bonds could actually pay in carbon credits on the principal and interest instead of in dollars. Now that money actually stays with me, right? And I can use that to back my central bank digital currency. So I think those are two really cool ways that we can leverage Web3 and kind of merging in with traditional finance.
Hi, does Ripple's Carbon Fund contribute directly to projects that are creating carbon offsets or tech startups exclusively?
Oh, no, we actually spend more money on ecological projects generating offsets. So ones that we can announce, Carbon Cure, we're taking they're taking CO2, they're injecting it into cement. So now you've got 1,000-year permanence. And ironically, it makes the cement stronger. So you can use less cement. So you're actually reducing the impact of cement, which is one of the worst things out there in terms of carbon impact. And I'm trying to think of the ones we can announce. We're in a biochar company, so we just invested a bunch of money in a biochar company. I don't know that I can say its name. And then a number of other projects. We're actually, for the most part, we're investing on what I'd say like the mid-tier price of those carbon credits, so things that are like in the $60 to $120 range, and they're more forward-thinking technology projects. We like forestry projects, and that's in our portfolio, but so far we haven't really been investing in them because I think it's more interesting to figure out some of the stuff in those other ranges.
Okay. Time for one last question. No? Okay, thank you. Oh,
With the funding alternatives you were just talking about, do you have any insights for smaller scale projects? So like community-oriented agroforestry or like networked small scale projects in a region that aren't like a larger kind of project developer, but there's so many of those across the board.
Yeah. So I do. I don't know if I can talk about them yet. But just imagine if you had a system where a lot of these smaller projects could come together, have an easy platform for them to use, and they can aggregate their inventory so that they can respond to these bigger RFPs, right? In a nice, easy way. I mean, that's a problem, right? Microsoft has these wonderful RFPs for forestry projects, but there's no way that a small forestry project with 100,000 credits could ever respond to it.